We're coming on the air with breaking news any moment now. We're expecting a critical decision from the Federal Reserve. The agency expected to raise interest rates for the fourth time this year. Economists expect a rate hike of 0.75% to help drive down inflation. So what exactly happens when the Fed raises interest rates? Well, the price of anything that you put interest on goes up. We're talking credit card bills, new car loans, new mortgages, and student loans, things that tens of millions of Americans pay every single day. Leading off our breaking news coverage this hour, NBC News correspondent Tom Costello, MSNBC anchor Lindsay Reiser, and CNBC correspondent Diana Olick. Tom, first let's start with you. What can we expect from the Fed today? And talk to us about the pressure the agency is under to control a lot of this inflation.
Yeah, breaking news. The decision is in seconds ago. The Federal Reserve is, in fact, raising interest rates by 0.75 percentage point. That's on the key federal funds rate. That's the fund, essentially the rate that is charged between banks. What does that mean? As you suggested, the fourth rate hike so far this year. The Fed engaged in the most aggressive and fastest series of rate hikes that we've seen since 1994, underscoring that this inflation threat to the economy is quite significant, running at 9.1%. That, of course, being a 40-year high, as we've said many, many times. The Fed is also, however, saying that while more rate hikes are likely to come in the future, because, of course, it's not going to be an overnight thing where you bring inflation down that quickly, they also are suggesting that we still are seeing wage gains. In other words, employers are paying people more, and unemployment remains low at about 50-year lows, 3.6%. So it is this very convoluted and confusing picture for economists to get their hands around. It's unusual that we would be in a situation where inflation is running like this, where there's widespread talk that we may be on the verge of a recession. On the other hand, we still have 50-year low unemployment levels. That's just really an unusual predicament for the Fed to be in. The question now, how much will they be raising rates at their next meeting? That's coming in September. The thinking all along for the last month has been they could go by another full percentage point in September if they don't see inflation starting to moderate. The question's going to be, as we now expect a news conference from the Fed chairman, Jerome Powell, does he give us any hints as to whether the Fed thinks that inflation is starting to cool down, or do they still think it's hot and heavy? So all of that will be key as we listen at this news conference in the next 20 minutes. Yeah, Tom, big and breaking. I heard you say convoluted, and I want to talk about the word that's been circling, recession. It's a bit more complicated to understand now than in years past. Can you help break this down, especially given how record-breaking these numbers are? Well, as I mentioned, the unemployment rate is still significantly low, and there is significant debate among economists as to whether we are headed for a recession, whether we are already there. At least the street definition of a recession is 2 quarters of economic contraction, right? 2 quarters of the economy shrinking. That's not the technical definition, but that's kind of what the street definition is. So are we there already? And listen, if we are there already, if the economy shrank 2 quarters in a row, and yet you have this record unemployment or 50-year low unemployment, maybe this is recession light. Maybe it's about to get a lot worse. I mean, we don't have the answers to this, and the Fed doesn't have the answers to this. And this is the nation's central bank, and it's up to them to try to get inflation under control. Let me just make the point. This is the biggest economy in the world, as I've said before. We are not the only economy in the world. The UK, Canada, Europe, all dealing with this kind of inflation right now, all of them raising interest rates. But what this economy does, the biggest in the world does, matters, and it impacts everybody around the world.
It definitely matters. And I heard you say, are we in recession light? With the inflation, it doesn't feel like it, right? Because the hard numbers are hovering near 9%. The Fed wants inflation at 2%. So with the rate hikes we have seen this year so far, what else can be done to get it under control, or is it sort of inevitable?
Yeah, let me just make it clear. I think the Fed is the target for inflation more like 3%, right? So if you're coming from 9%, you bring it down to 3%. Listen, that's still a big drop. Don't get me wrong. But That's their challenge right now, to do that. And the question is, is inflation already helping to cool the economy on its own? It doesn't have to only be the Fed raising rates to bring inflation down. It may be simply because the economy is cooling. We've already seen gas prices come down. We've already seen just today, we saw new home sales, pending home sales fall by 20% already. Mortgage applications are dropping. So all of that would suggest the economy is cooling. And therefore, maybe they don't need to be so aggressive at the next Fed meeting. But you've got Diana Olick here, who is the expert on all things real estate. She might have better insight into that than I do.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.